This is the final warning here, okay? And really, if you're ever going to turn your friends and relatives onto what we do, which you know is unique, okay? Everybody out there saying, yeah, deep correction, but the Fed's got it under control, and the Fed, nobody is ever going to tell you when a crash like this is going to get worse. All the signs are there that we put in the top. This is not another correction, okay?
A famous financial analyst and best-selling author, Harry Dent Jr., is known for his doomsday forecasts of economic collapse. Dent warns in his latest interview of an imminent economic collapse that could be the worst economic disaster ever. Given his track record of accuracy and his proficiency in economic forecasting, his predictions about the economy's future could have far-reaching consequences. As always, it's great to have you back at Market Empire. Dent dives deep into the core problems plaguing the global economy and offers his expert assessment of the potential outcomes, in the absence of preventative action.
We finally saw that first crash off of this bubble that's been extended since the 2009 lows, and central banks are saying we'll print endless amounts of money, which they did until they overdid it and finally had to tighten some, okay? Well, that's enough for the markets to get scared because they've been running on nothing but stimulus since 2009, okay? The whole boom from that into the late 2007, I was the one that predicted that the earliest. Baby boom generation, greatest boom in history, okay? It was over after that. 2008 was a serious crash, did look like 1930, the next Great Depression, for good reason, and that's what got the central banks panicking. So they've been printing money wildly ever since. Well, 2022 was important because we had finally got that first crash. I studied all the crashes back a couple hundred years since we've had stock markets, and it basically says a bubble doesn't burst until you get at least a rapid 28% crash, and better on average closer to 40%. Well, we finally got that into June 2022. NASDAQ down 34%, and the fact that that went down farther, down 38% more recently, just confirms that even more. So I've been saying this finally clearly looks like a top. So now your strategy is selling on bounces if you didn't, and I gave my strongest all-out, two of them, clear sell signals, all-out sell signals for stocks in December, just before the January 4th peak in the S&P, and just after the November 22nd peak in the NASDAQ. So we did warn about this, but there's still people I know that have positions, and you still got friends out there that don't have a clue of what's going to happen, and family members. So this is the time to get serious, again, about getting out of risk assets to the degree you haven't, getting into those safe haven treasury bonds. It's not going to be gold. Gold has held up as usual reasonably in the early stages of this, but that's what it did into the first half of 2008, and then it crashed almost 50% with everything else and went crying for mommy. So you got to get serious about being extremely defensive now. And you got relatives and friends that you know are not taking this seriously, and most people still aren't, you need to warn them now.
The video features a talk by Harry Dent about the significance of the year 2022 in the financial markets. This was the first year since the economic downturn of 2009 that a bubble could be crushed, and he notes that this makes the year noteworthy. The Federal Reserve kept interest rates at record lows between 2009 and 2018 to boost the economy. He didn't intend for his policies to lead to asset bubbles in the stock and real estate markets, but that's exactly what happened. The Fed started to go in the opposite direction in December 2018 by gradually increasing interest rates. Because of this, the stock market suffered a sharp decline toward the end of 2018, and many people worried that the housing market would soon follow suit. Even as interest rates increased, the housing market expansion continued. The healthy state of the labor market and historically low mortgage rates played a role. Nonetheless, as time progressed, the housing market cooled, new home sales slowed, and prices stabilized. Because of this, the housing market slump lasted even longer, with subsequent negative effects on the economy. Since then, Dent claims central banks have printed too much money to boost the economy. Dent, however, thinks the rapid drop of 28% in June 2022 and the even more recent drop of 38% proof that the bubble has indeed burst. Now is the time to take a defensive stance, he says. So sell your stocks and other risky investments and put the money into treasury bonds. He also suggests sounding the alarm for those who might not take the threat seriously. As always, it's great to have you back at Market Empire.
Again, what have we seen here? At first, 34% crash, okay? And then a good rally, okay, perfectly. That's the two wave off the one wave crash. And it didn't go anywhere new highs. Another good sign. Then we see another wave down, two new lows. A great sign. That's the beginning, should be the beginning of the larger and probably most forceful third wave. This is the one that's going to hit people the hardest. And by the time people wake up a few months from now and say, oh, I should have sold, it will be too late. This wave should take us down 55, 60% from the top instead of 34% in the NASDAQ and things like that. So again, this is the final warning here, okay? And really, if you're ever going to turn your friends and relatives onto what we do, which you know is unique, okay? Everybody out there saying, yeah, deep correction, but the Fed's got it under control, and the Fed, nobody is ever going to tell you when a crash like this is going to get worse. All the signs are there that we put in the top. This is not another correction, okay? We should have crashed longer and harder into 2009 and 10 even, but central banks stopped that. Well, they threw everything they had at more than I or anybody would have ever forecasted. They overreacted, and that's precisely why they finally had to tighten again. And they're thinking, since the economy's been strong, that it's because it's strong. No, it's all been stimulus. So you know my view. With the stimulus, if they just took the stimulus to zero, but no, they are actually tightening. So my view is the economy and stocks are not going to react to this well, already haven't. Already looks like we're moving this third wave. All we need is a real clear break to new lows at this point, okay? 10,088 is the line in the sand on the NASDAQ. That's just 4 to 5% away. We could be there in a heartbeat. And looks like we're breaking into that third wave more decisively, which means you got to break into the third wave of the third wave. So I don't want to get too confusing here, but
according to Dent, the economy and stock market will not respond to an impending crash. He warns that the NASDAQ is only 4 or 5% above its recent low, and that the crash may become more noticeable in the near future. Others who are serious about protecting their assets would be wise to pay attention to this situation and possibly take action to protect themselves, as Dent recommends that people subscribe to their newsletter. He adds that investors may freak out if they see no end for the stock market's decline and no new high on the horizon. He then urges people to take preventative measures and rally their loved ones to do the same to stay ahead of the potential crash. A few essential steps can be taken here. First and foremost, it's crucial to invest in a wide range of different assets. If one type of investment fails, you still have others to fall back on. Second, you should always keep some money in the bank to seize opportunities as they present themselves. Always remember that the one with the most money is the victor. Finally, ensure you know what's going on with the economy by keeping up with the news. You will be better prepared to handle whatever challenges you face if you follow these suggestions. Some have praised Dent's predictions, while others have criticized him. Should investors and economic watchers pay attention to Dent's warnings? Dent's forecasts may indicate what lies ahead, though no one can know. That's it for today's video. Thank you for watching, and leave your comments down below. Please hit the like button, share this video with your friends, subscribe to the channel, and hit the bell to be notified when we upload new videos to Market Empire.